want to do is we want to recap a bit the day, right? It's been a long, long day. We've had a packed schedule. Kudos to everyone who's still able to consume information and listen and participate. But yeah, so going through some of the highlights, actually, Ryan Selkis said, well, he's not bullish in real world assets. I think everyone else was bullish, so I'm not sure if he was just trying to be contrarian or if he believed more in that. But what do you think about real world assets?
I'm bullish. I mean, there's a reason why we're here. Base has only been around for a month, but I think as we think about kind of what's going to bring capital on chain, what's going to bring activity on chain, real world assets are kind of at the center of it. And so I think there's obviously a lot of stuff, like Ryan was saying, to figure out from a regulatory framework perspective, but from a pure ability for the efficiency, transparency, and global accessibility of the on-chain environment to shine, I think that all of those characteristics coming to this emerging class is going to be massive, and that over the next, whether it's 1 year, 5 years, 10 years, we're going to see that be, a huge driver of value across the industry.
So another remark, I think that got everyone laughing a little bit was, it was Meltem and Thomas were talking about when the first $10 trillion are going to come on chain. And Meltem said, well, permission doesn't count. I'm not going to use her language, but because it's bullshit. What do you think? Like permission blockchains, like we've talked a lot about need for permissions. I don't talk much about permission blockchains, but where do we need permissions and where do we not need them?
Yeah, well, I mean, just in terms of permission blockchains, I was trying to think of a permission blockchain that has real mindshare right now, and I couldn't think of one. Like the last one I could think of was, what was the one that the Overstock founder did, TX or
T0?
T0 is 4 years ago. So I'm not seeing permission blockchains have really any mind share on a day-to-day basis. I think there'll be interesting experiments that happen with them, but I think all of the innovation that we're seeing right now from a builder perspective is happening in kind of permissionless open environments. And I think that reflects, how we've decided to build Base. Base is an open permissionless chain. And I think our thesis is there are going to be important role for permissioning, but that doesn't have to happen at the chain level. At the chain level, you can keep an open permissionless environment because that's what's going to drive the most kind of creativity, the most innovation. But then kind of building on top of that, you're able to build an application level infrastructure that enables you to, do certain compliance or to check KYC of users, or even say, hey, just these assets are the ones that are going to be traded. You have people even here who are doing that, like Moav, where that's like a powerful DEX operating on an open permissionless blockchain, but with a ton of really cool permissioning infrastructure that allows them to serve certain asset classes. So I agree with Melton. I think that we are very much living in a world, thankfully, of open and permissionless blockchains, and then seeing kind of the emerging infrastructure for doing permissioning on top of that.
So I agree, and I want to throw in my 2 cents here. I got into crypto because I saw how shitty it is when you're not a mega corporation. You do not have 50 bankers on speed dial that can serve all of your financial needs, right? And my motivation for blockchain was to say, well, actually we need to make finance available to everyone, because it's like money and money is the fuel that can turn ideas into reality, right? It can build stuff. It gives you access to education. It gives you access to housing, whatever it is, right? And the more direct you can make that, generally, I think the better. But then there's also, this is, I think, a big driver for openness. The other reason, though, is, right, one thing we definitely know is that the more open and the more liquid, the more accessible markets are, generally, the better they function. I think what we're trying to do with DeFi is to say, well, yeah, this market should be open to everybody. It should be composable, because you do not want, as a user, to be limited to a blockchain that is just available to the customers of a single bank, right? Like that is exactly not what we're trying to do. Or it's the stocks on the New York Stock Exchange, but not the ones on the Japanese Stock Exchange. Like that does not make sense. We want to have this like 24/7 global infrastructure that anyone can use without having to trust each other, without having to kind of like enter into these like bilateral agreements, right? It's just that. So yeah.
One other thought on that is I think a lot of the permissioned blockchain experiments that we have seen, my intuition from having navigated this and kind of worked through the process of incubating and launching Base out of Coinbase, is that a lot of that actually comes downstream, not of product requirements, but like perception of compliance and legal requirements. And so in kind of like large corporations that are, public companies or are trying to figure out how to do on-chain stuff for the first time, they say, hey, we want to do something on-chain. And then they go and talk to their compliance and legal teams. And the legal teams say, hey, well, you got to do this. And I think that is, not the way to build a product, right? The way to build a product is work backwards from the requirements of actual customers. And like you're saying, and you guys, this is the father of real world assets here. This is a man who literally, Centrifuge was started in 2016 before any of us were thinking about real world assets. And I think the place that we see crypto being valuable is for creating open permissionless systems that enable an open global on-chain economy. Like that's the product market fit. And I think the second we start to like peel that back and start from the compliance and legal requirements or the perception of what the compliance and legal requirements are, we basically close down all the creativity and we shut down the vision of increased economic freedom, of a global economy, of all the things that crypto can really make possible.
So it was the 2017 bull market that pulled me in, not 2016. Not quite true. I've had ETH for longer than that, but I mean, yeah, like it is where we're coming from. I also like often draw the parallels to the internet, right? Like you can actually have Russia, Iran, the US, Ukraine, and mortal enemies like talk to each other on one global network. And that is like ultimately what makes the internet great, right? Like it is a truly global system. And you're not like, you are able to sort of live on the same internet. And I think in the same way, like different projects, different organizations with different needs of what they want to do, they'll still just be able to use one blockchain or kind of like an open blockchain. Yeah, I fully agree with you here. So another thing that came up is like transparency and if it really matters. So I know you have like an interesting story about that, but what would you say?
Yeah, I think we're kind of hitting on that with the like open permissionless blockchain, but we were talking about a bunch of the conversations over the last few hours about transparency. And one of the things that came into my mind about transparency is Coinbase's decision to actually become a public company. And I joined Coinbase at the beginning of 2017. It was like 60 people at the time. It's now 4,000 people. It was a private company, pre-Series D or pre-Series C. Now it's obviously a public company. And I think one of the things that we've reflected a lot on since our IPO was when we set about the effort to become a public company, there's obviously like parts of it that were connected to like, wanting access to different capital markets and wanting access to this kind of like new milestone for the business, for employees. But I actually think the biggest single thing that drove us wanting to be a public company was transparency. We basically said, hey, if we want to be a reputable business that customers trust, we want people to be able to look at us and like really, really look at us and be like, is this a reputable business that we can trust? Because that felt so essential to what crypto is all about. And as we kind of, went public in 2021, and then we had the whole 2021 bull market, and then the 2022 crash, and we had all of these other companies that went through, I think pretty dramatic negative outcomes, both for the companies and for their customers, oftentimes as a result of a lack of transparency. I think that kind of North Star of transparency, we felt very grateful that we'd prioritized that, because it's not like, the conversations that happened at other companies around, should we do this under collateralized lending, or should we manage our finances in this way? It's not like those conversations didn't happen at Coinbase. Of course, everything is considered, but having a North Star of A, we're going to always do the right thing, and B, we're going to be an incredibly transparent business that has to stand up and show our customers what we're all about. I think that was this really powerful kind of guiding force for us that ultimately made it so that we could, go through this bull, boom, bust cycle and come out the other side, I think, actually a lot stronger as a business versus a lot of the other people who are in the market.
I mean, Coinbase had to file quarterly earnings. And if you looked at DeFi, right, like there is a very clear line between CeFi companies failing, not disclosing anything that's going on. People gave money, signed up, downloaded an app, put money in, right, and suddenly we're magically generating 10% yield. No one asked where it was coming from. And then on the other side, DeFi protocols actually, and kind of looking at Terra Luna and the crash that happened there and everything that followed, right? Like the DeFi protocols actually are still around. Now, they struggled because obviously the market was hugely volatile, but in the end, right? Like the fact that you couldn't just look at Coinbase's quarterly statement, but you could also look at Aave's by the block statement, or you could look at where the DAI is coming from, what it's backed by, right? Like actually those lending protocols, those stable coins, right? They actually did kind of in the same way have this transparency, which is a huge benefit to everyone that's using them.
Yeah, I mean, I think it's I think one of the frustrating things as you talk to regulators where they're like, hey, all this bad stuff happened in crypto. And my take on that is like, no, all this bad stuff happened in centralized companies that were doing the same sorts of bad things that people have been doing in finance for a long time, and the same sorts of things that people have been getting blown up in finance for a long time. But when you actually look at the crypto things, like the Aaves, the compounds, the centrifuges, the on-chain protocols that have this transparency, those things operated as they should. And, Terra Luna obviously blew up, but Terra Luna operated as it should. It's just that mechanic wasn't well designed, and it led to bad outcomes. And so I think that there is, transparency. It's an essential positive characteristic of crypto and why we're doing what we're doing.
So the last hot take, maybe the last piece of alpha, it feels like a lot of it today was just around treasuries. Do you think like U.S. treasuries, do you think tokenized treasury yield is the end-all be-all, or where are we going from there?
I think definitely not the end-all be-all, right? Like if you look back 2 years, there was no treasury yield. And so like if I look forward 2 years, would it be like a positive assessment to be like, this is the end all be all? Absolutely not. I do think that one thing that is very interesting and very important about what's happening right now in tokenized treasuries is if you think about like real world assets and the process of real world assets coming on chain, in many ways, it's a process of eliminating risk at different layers of the stack, right? You have the underlying protocol chain risk, you have the smart contract risk, you have the underwriting risk, you have the legal entity risk, you have the dollar risk. And one of the things that Treasuries does is they actually compress and eliminate a bunch of risk that is there in other protocols or in other real world assets. So like a treasury, on-chain treasury, you still have the like structuring risk, and you have the smart contract risk, and you have the chain risk, but the treasury itself is very simple. Right, it's a treasury, versus with other, like debt assets or things like that. Like then you also have all of those other risks of like, is this underwriting effective? Right? Like, is the lender a good, or is the borrower a good borrower? And so I do think that one thing that will happen is we're going to see this big boom of treasuries, and that's going to lead to like kind of massive diversity and creative exploration in structuring and smart contracts and chains, and that's going to de-risk a bunch of the other, like a bunch of that stuff, which means that by the time a lot of the other products start coming on chain, they'll be building on a much more solid kind of stack that's been de-risked by that treasury silver tracer bullet. And then we can really engage with, okay, what are the other risks here? Like, how do we make sure we're really looking at underwriting and we're really looking at like the traditional risks that we should be looking at, rather than a bunch of the new novel risks that just exist because of the new form that these things are living in.
Yeah, I mean, the timeline, and Nick Carter also talked about just how the macro market changed. If you like look at DeFi rates, right, whether it's on Aave Compound or in other places, when we first launched the first pool, and that was New Silver, I think kind of the senior yield on New Silver was 4.5%. Now, at the time, I would have said like basically an equivalent of a risk-free rate in DeFi, and even like the CeFi futures arbitrage. Those were like at the 6, 7, 8%, right? So we tried really hard to compete with that yield, but it was a crazy bull market. Prices were going up. No one was really there was not enough capacity to fill the demand. So like rates were just super high, and so real world assets were really struggling. And we went with private credit because that was the thing that could be competitive, right? You cannot tokenize treasuries because you simply could not make money with that. Now fast forward, we're in a different world. I'm looking forward though to the point where every dollar that could go into treasuries on chain is in treasuries, because really at that point, hopefully we will be in a place where like Aave and compound rates on USDC are at least 5.5%. They should probably be higher. And then we can actually start talking about, okay, what comes next? But you're right, it will give us a whole lot of capacity and kind of momentum to kind of build out the infrastructure. Until then, we're just trying to make sure we're not losing 5% a year, which is what we're doing when we're really not having treasury yield, right? Because that's inflation, that's risk-free rate. Yeah,
and I think that is going to probably happen faster than people expect, right? If you look at the rate of on-chain treasury growth right now, it's like pretty up and to the right. And it's very up and to the right. And there aren't that many charts in crypto that look up and to the right in that way. And so I expect it's going to keep going up and to the right. And, at some point it'll change, but I think it's going to happen fast.
I mean, it is going up and to the right. The other interesting indicator with like treasuries is like the contraction in stablecoin supplies, right, is also kind of a proxy for that, because you see that is actually money that's leaving crypto, right? Like dollars that are most likely going into other opportunities, most likely going into treasuries as a first step, and then maybe elsewhere, right? But so actually the fact that we still have an impressive amount of stablecoins given you don't earn any yield on them, but it is seeing how that is going down, obviously also showing you just how sticky that capital is. And then you start talking to like funds, high net worth individuals, family offices, DAO treasuries, like just startups in crypto that have terrible issues with banking that are like still stuck, as more and more of those who do not have access to the traditional banking rails or traditional finance rails, right? As those come and start buying tokenized treasuries, I think, we'll end up in this point. I agree with you. It's going to hopefully be faster than we all think.
Knock on wood.
Knock on wood, yes. So finishing up a bit of the recap and like summary of the day. Glad to have you here in general, Jesse.
Glad to be here.
So I want to talk a bit also about what you guys are building. And maybe I want to hear about what Web3 Wallet is.
Yeah. I would say I'm speaking, hey everyone, I'm Jesse. I kind of wear two hats. I've been at Coinbase for 7 years. And then the last year and a half, I've been incubating Base, which is an Ethereum layer 2 that we just launched a month ago. The last 5 days, I think we've been #1 in transactions across all L2s per second. And I think it's already up to something like 600 million TVL. So it's happening fast. I still moonlight for Coinbase, and the product that you're talking about is our institutional Web3 wallet, which is basically this product that we thought about, probably started working on about a year and a half ago. And the North Star for that was, how do we start to give institutions the capability to come on chain? in the same way that Coinbase is exploring and trying to figure out how do we come on chain, it's like for the average hedge fund or the average VC or the average person who's like, hey, I want to start deploying my capital in Aave or Compound or tokenized treasuries, like what actual tools do I have in order to do that? And so just on, I think Monday of last week, we launched what is called the Institutional Web3 Wallet. That's basically a fully powered on-chain wallet. Think MetaMask or Coinbase Wallet, except for it's fully integrated into Coinbase Prime, Coinbase Custody, Coinbase Exchange, and has all the institutional controls that one might want. So you can do, multi-signature on every transaction, you can get full audits on everything, and then you can interact with any protocol that you want. And so as we've thought about kind of like real world assets and we've thought about kind of the institutional market, particularly on the Base side, we've increasingly been focused on really what we think about as like supporting people at the bottom and the top of the stack. It's like, how do we build a low cost environment where people can run applications like Centrifuge and other real world asset protocols that allow people to actually tokenize assets and bring them on chain. And then how do we provide the top of the stack, the wallet infrastructure, both for consumers with Coinbase and Coinbase Wallet, but then really for institutions with the Insta Web3 wallet so that they can then take their capital, whether it's cash or Ethereum or whatever it may be, and start to deploy it on those protocols. And basically free up that middle ground for people who are better at innovating than us, like people who are actually pushing the limits of what we can bring on chain. And so we just started rolling that out last week. We already have a ton of customers who are using it. And actually for all of the Base key management and everything we do on chain, like anytime we mint an NFT or publish a blog post on Mirror, we've actually been using that product for the last 6 months now. And so that's been really cool to actually get to be in it and be like, oh, this actually works. And we're like pretty crypto native. And so it's been cool to get to kind of like, whatever that phrase is, run the tires or kick the
dog
tires.
Fooding?
Dog fooding, that too.
So Web3 wallet, institutional focus wallet. You talked about the vision of where this should go. I mean, in a way, I would say Coinbase is the incumbent in DeFi. You are coming and saying, okay, well, like you have obviously this massive user base. They're right now all buying Bitcoin and ETH on Coinbase Prime or on wherever else, right? We now, like with Base, obviously it's supposed to be an open L2. Coinbase doesn't have any control in it. It's kind of like you're turning into the disruptor again. How is it for you? It's kind of silly to call Coinbase an incumbent, but for that exercise, like how do you think about the role of Coinbase in the future and kind of how Base fits into that?
Yeah, like Coinbase is a 12-year-old company that was started before Ethereum existed, before smart contracts existed, before Centrifuge and real world assets existed. And so I think through that lens, Coinbase in many ways is still predominantly a Web 2 company, like an off-chain company. And so, when we started thinking about Base, like late 2021, the North Star for us was like, how do we bring Coinbase on chain? Or another way of saying that is like, how do we disrupt ourselves so that we don't get stuck being the AOL of crypto and basically it's kind of like languishing in we can help people. Being
too early?
Yeah, being too early. We can help people buy, but we can't actually help people do anything with crypto. And, to Brian Armstrong, our CEO's credit, like this has been the vision from the beginning, right? In 2016, he wrote this thing called the Coinbase Secret Master Plan, which was basically like there's 4 parts of the Coinbase vision. The first is like we're going to build the protocols. That's Bitcoin, Ethereum. It's just going to happen. We're going to help contribute to those. Then we're going to build the exchange. Then we're going to build the consumer interfaces. This is Coinbase Wallet. This is kind of like the browser. And then we're going to have millions of apps that get billions of users to actually do things with crypto. And I think our feeling in kind of late 2021 was that we were basically stagnating at phase 3, between phase 3 and 4. Like we built some of the consumer interfaces, like we had Coinbase Wallet, but there just wasn't anything for people to do, or not enough things for people to do besides just speculate on crypto. And that's never been our North Star. It's always been, we want people to have millions of apps that billions of people actually want to use. And so I think a lot of our focus for the last 2 years has been, okay, what do we need to do to actually enable those millions of apps, including stablecoins, including real world assets, including kind of this whole like emerging ecosystem that's nascent but growing, and disrupt ourselves and make it so that the trading part of our business is but one part, and there's all these other things that are actually enabling our vision of bringing people on chain and increasing economic freedom.
What do you think will Coinbase's business model look like in the future?
What do I think Coinbase's business model
in
look
that
like
new disrupted world?
Yeah, I mean, I think if you look at Coinbase's business model to date, it has basically been make it really easy for people to do things in crypto. And there's been one thing to do, which is speculate. And that's been a great business. And I think our expectation is that as the number of things that people can do in crypto increase, if we are able to continue making it really easy for people to do those things, that will be a great business. And so exactly how that manifests, like where does the value capture happen? We're not, going to say, hey, it's exactly here. But I think the thesis is like, let's just keep making it easy for people to use crypto. The more usage of crypto, the better it is for our business. Wow,
we're really. I just looked at the time, and we're rushing. We're running through this. It's good, great, so much stuff. So we talked about L2s. We talked about better wallets. What's next, and why are you here today?
Yeah, I mean, we kind of opened with it. Why am I here today? Because we think real world assets are the future of basically institutional investing, the future of money coming on chain in a major way. We're also really excited to be announcing that Centrifuge and Base are going to be working together to bring Centrifuge to Base and start bringing more and more real world assets to layer 2, where we have 100 times cheaper fees, much faster finality, and I think much better access to people all over the world, both on the institutional side and the retail side. And so, I think for us, it's all about like, what are the levers and what are the investments we can be making right now in order to enable that next wave of applications, with a huge chunk of the focus being on enabling new kinds of financial assets to come on chain that actually take advantage of this incredibly powerful platform that's transparent, that's efficient, and that's globally available by default.
That's nice to hear.
And honestly, I just feel so grateful to be here. I mean, this is, can you guys believe this is the first annual Real World Asset Summit? It's been epic.
We're going to talk to our market.
Let's go.
I'm going to have a long look at myself in the mirror tomorrow morning and say, okay, do I really want to do this again next year? And then we're going to have to talk to our team and everyone that supported us who making this happen today and ask them if they want to do it again. I hope we will. I think everyone had enough fun that we will be doing it again. Yeah, it is the first one. It is maybe for the first time that we're in a situation in this industry saying, yeah, like real world assets are actually going to be the future. Talking about the future, like you're building a scalable L2. That's Base. What is the piece that you think is the biggest missing item for you that has to come next for kind of this real world asset vision to materialize more for both Base, for Coinbase, for the industry in general? Yeah.
Before I answer that question, I do want to just tell a story. I was at dinner last night with Lucas, and Lucas was telling and just kind of describing how in 2017 it felt like we were at these events where it was kind of like the beginning of what a lot of eventually turned into the things that are huge right now, and how it kind of felt the same here right now, where it feels like, obviously real world assets have been going on since 2017, but there's something about all of us being together here that feels like pretty special. Like there will never be another first real world asset summit. And so I just want to give another thank you to Lucas and the Centrifuge team for bringing us together, making this happen, and creating a moment that I think we all will look back on in like 5 or 6 or 7 years and be like, oh, remember when there was only $1.2 billion of real world assets on chain, and now there are $10 trillion of real world assets on chain? So thank you.
Thank you.
In terms of what do I think is holding us back? I mean, I think a few things. So one is we've gotten L2s to be much cheaper, but they're still too expensive. I think like right now we're generally in the like 8 to 20 cent range to do transactions. I think we need to get that sub-cent, and that's a big priority for us. We're working on that with EIP 4844, which is an upgrade to Ethereum. So I think that's one big one. I think the second big one is I still think we need to make wallets better. Like the institutional Web3 wallet is a big part of this. I think we're starting to see embedded wallets. Like if people have used FriendTech, like the Privy flow where you just put in your phone number and it all just works. I think that's going to be a huge unlock, is basically making it so, anyone can more easily access their assets and manage them in a secure way. And I think the final one is identity. Like if you look at the financial markets that are off-chain today, the vast majority of consumer financial activity is driven by behaviors that are currently impossible on-chain. For instance, under-collateralized lending in the form of credit cards. You can't build those things on-chain because you don't have identity on-chain. And so I think we need to get the next level of knowing who people are on-chain in order to unlock the next wave of use cases. So lower cost L2s, even further, better wallets, better identity.
Great. All right. So maybe just for the closing question, what's your prediction for where we will be in 5 years? 10 trillion? Probably not.
Where do I think we'll be in 5 years? I think we're going to stop calling these things real world assets in 5 years.
I hope so.
Yeah, I hope so. I think that these things these are just going to be assets. And I think people are going to be looking at people who aren't issuing assets on chain and be saying, what are you doing? Why are you using antiquated legacy systems that are 100 times more expensive and have no transparency? And so I think we will have kind of that's not to say that there won't still be trillions of dollars of assets in those antiquated systems, but I think we will have crossed the chasm in 5 years where it's widely accepted and understood, oh my God, this is an incredibly powerful new platform that everyone should be trying to adopt as quickly as humanly possible. What about you?
I mean, I definitely ascribe to this vision. I also opened saying we were both hopeless optimists, and I guess this is what's going to keep us going for another 6 years to actually get there, no matter how long it takes. But yeah, I do think so. I think we're going to be. I mean, the big thing we have to do is we have to keep proving out the technology and reducing the perceived risk of doing all that. And I do think we are making progress, right? Like we're in the hundreds of millions and the billions. Like we're going to the tens of billions. Like Wall Street is noticing, and Wall Street is starting to see, okay, well, actually maybe this stuff does work. Maybe this stuff is where we can start touching it. And ultimately, right, like the goal of a pension fund, a endowment, just a savings account, like starting to be like using crypto collateral or crypto assets, right? I think that's still far away from like being mainstream in 5 years, but I think we're going to see that the first real allocations into crypto. So far, most of the institutional interest is always on can we be a borrower? How do we experiment without exposing our customers to risk? I think that's like the big thing to work on, is to get financial institutions comfortable with actually exposing their customers to the risk that is real world assets or on-chain assets today. So yeah, thank you very much for coming. I hope this was a motivating end of this first ever annual Real World Asset Summit. It's not quite over yet. This hotel has an amazing rooftop, and we're going to have drinks, food, a sunset to look at, the New York skyline to look at. So go up there and enjoy it. Just take the elevators out in the lobby and go up, and I'm looking forward to seeing you all there.
Thanks everyone for coming.
Thank you.